Hey everyone, welcome back to the Mike Rosehart Show. How you guys doing? Today we're going to talk about the simple path to becoming a millionaire, or paths to becoming a millionaire, because there are many different paths that will get you there. And over a long enough period of time, it's almost impossible not to hit millionaire if you follow these steps. And that's if you have a basic job, as long as you work full time at something and follow these steps, you'd be a millionaire. So it's pretty darn simple. But we will also do on the second half of the stream, like I always do, live every single Wednesday from 7 to 8 p.m. Eastern Standard Time, the live Q&A. So jump in the bottom and say hello and throw in your comments, and I'll be happy to answer them. If you have any questions too, in the bottom, free, fun, let's do it. So, hey Andrew, how you doing? Acer, how you doing? Welcome to the stream. Justin, good to see you on as well. Today, we're talking about the paths to millionaire, and then we'll do what we always do, which is just, I'll riff off your guys' questions and comments, and we'll go wherever this takes us, free, financial advice or real estate advice or whatever you guys want to talk about. We'll just go there and talk about it, but probably centered around financial independence in some way. And I see some good questions already popping up here. And probably going to get a little political with that question there, but I won't read it yet. I'll first do my little preamble, which is that I haven't talked to you guys in a week, and today I just thought, hey, I saw a post on Facebook about someone was just posting the path to millionaire, and I'd heard it before. There's so many different ways that you can ride the path of the train to millionaire. One is like simply saving 10% of whatever you earn and investing that at like a 7% return, and in a 25-year period you hit millionaire. So that's if you make like a little bit more than minimum wage here in Ontario. So that's one path, and it can take a little bit longer than 25 years depending on the rate of return that you use. I think they're using 10, but anyone can get about 7% if they invest in public equities. Another really easy way that's my favorite that I liked on this post was if you just go and buy two $300,000 properties at 5% down. So buy the first property, $300,000 you need at 5% down, that's $15,000. So you get $15,000 saved up and you buy a house. Then you buy a second house. Then you do nothing for like 20 or 25 years, pay off the mortgages, and even if they make no cash flow, if they make cash flow, bonus, but you just literally pay down the mortgages and let them appreciate, and at a 3% appreciation rate, which is actually historically very low. Most of the markets, where I'm from, in the last 5 years have done 100% in 5 years. But let's look at a long-term picture of like 3%. So it's taking a long time for the houses to double in value. And if you just pay down the mortgage balance over a 20-year period and you let the house appreciate, and let's pretend there's no cash flow, which is like anti the Mike Rosehart strategy. People know that I hate buying real estate that doesn't produce positive cash flow. That's stupid. That's more of a liability than an asset. But if you just did that, let's not factor in the rental income, because if there's rental income, every 5 years you can buy another house. And so you'd be a multi-millionaire just buying two houses and reinvesting whatever you get from those two houses. You'd be a millionaire. It's so simple. Like if you just go out right now and buy, the average house in London's like a little over 500,000. You buy 10 average properties in London, Ontario, where I live. You put 20% down on all 10 of those properties. You're looking at less than $1 million in equity to start. And after 25 years, your initial investment at the current historical 25-year average in London will put you at around 6 to 8 million net worth. So you want to be a deca millionaire, you go buy 10 properties and you wait. You want to be even richer, you buy more properties and you wait. So it's pretty crazy how real estate is so powerful. And let's unpack that for a second, because there's a few things at play here. One is it assumes you use leverage. So you go and get a bank loan to buy the property. It assumes you don't go and use all your money in cash and buy real estate. Because if a property appreciates at 3% every year, let's say it goes from a $300,000 valuation over a 20-year period to $700,000 valuation. That's at like a 3% growth rate. And that'll happen over time, right? Houses double in value every 10, 15, 20 years, depending on how fast your market's growing. In some markets, every 4 or 5 years, houses are doubling in value in the last 5 or 10 years. But again, I think that's a bit of a bull market. I think that's not indicative of future returns. They say past returns equal future returns. And I feel like that's not indicative of future. What we've seen in the last 5 years, I think, is an anomaly. If we look at, the 80s and 90s returns, we'll see that there's been times where it's been flat, where it's been slightly negative. And so let's just assume a 4% growth rate for real estate, pretty conservative, slightly outpacing inflation. That's about what we can expect from real estate. And if you lever that up, and let's say you do a 5% down payment, you're levered up 20 to 1. So a 5% down payment, if you're gonna hold the property forever, then remember, I hate 5% down. Here in Canada, CMHC and Genworth and all the companies that provide the private mortgage insurance, the PMI, they're very expensive. They take your entire 5% down payment as a fee up front. Whether you refinance it, whatever happens later, they take it as a fee up front and amortize it against you. So it costs a lot. But if you're gonna hold the property forever, you don't care. You've got access to this property. You control this. Say it's a $300,000 asset. You control this, or $500,000 asset. You control this $500,000 asset, and if it's 5% down, that's $25,000. So 25 grand down payment allows you to control a $500,000 asset. And you can use a real estate asset to generate cash flow. And so that's awesome when you can own a $500,000 property that can help you generate positive cash flow. But even if it doesn't generate positive cash flow, which it will, but let's just say that it didn't, it will generate appreciation for you at a 20 to 1 rate of return. So a 5% appreciation actually gives you a 100% return on your down payment. So every time the market goes up 5% real estate market goes up, your down payment at 5% down doubles. So you can see how quickly at 5% down, or if you bought a property at 20% down and then refinance part of that money out through a BRRRR, or let's say you added some value through renovation and refinance some of your capital out, we're left with 5 or 10% of the property, then you can imagine your return on invested capital will double, pretty quickly, right? So that's where it's awesome with real estate, is leverage. And that's what makes real estate so attractive. Leverage can be scary when you're taking on debt against assets that might not go up in value. Real estate's a pretty tried and true thing, produces cash flow that self-services the debt, and then there's also tends to be appreciation that outpaces inflation. And so when you're levered like that, it's just super attractive. And so as much as I hate landlording, you guys know, you've watched my journey over the last, we're coming up on 3 years, 2.5 years I've had this channel. You've watched my progression go from, acquiring a ton of real estate assets for other people and for myself, but a lot for other people, and then having to manage all that, see how much of a headache that was, and then see me sort of sell off a lot of the properties. And I've been actively selling off most of my partnerships because I don't want partners. I don't want to have assets where I don't have 100% control and where I'm not getting 100% of everything involved. And that doesn't mean that I won't take on debt, because I will still borrow money to buy real estate. I believe in securing against the property where I have full control and I don't have any equity partners. I still will acquire assets where I'm not the principal manager. So I can own 100% of the property, but I outsource the ownership. And sometimes that means selling a percentage of profit to a manager. Sometimes that means a fee base, but you run your numbers and you make it work. Anyway, if you can acquire a decent portfolio, let's say you go out and acquire 5 properties. 5 rental properties is not that hard to do. Any average Canadian making $40,000, $50,000 a year over a 5 or 10 year period could acquire a property a year. Not hard to do. Down payments, like if you're buying an average $300,000 property, you could, put 5% down your first one, 15 grand. Second one, maybe you put up 60 grand down payment. Again, these things can be saved for over one property for a couple of years. Once you have a small base of real estate properties, you got to imagine that 5 properties, let's say $300,000 to $500,000, is $1.5 million to, it could be even more in total real estate holdings. So if that appreciates 3% a year over next 20 years, you're looking at a $3 or $4 million real estate portfolio, and all of that gain is yours because you use debt instead of equity to take the deal down. The bank doesn't get a cut of the appreciation. They get a fixed interest payment every month, and hopefully the tenant pays that interest anyway. So all the appreciation is yours. And it's the beautiful thing is you didn't put all the money up to close the property, the bank did. So anyway, that was one of the simple paths to millionaire. It's the reason that I've been getting some comments recently against my video for about talking about anti-landlord, and I'm not necessarily anti-landlord. I'm anti-landlord in Ontario, and I'm anti. At my stage in the game, I'm not going to talk to a tenant. I'm not interested in being a property manager, getting involved in any of that. I would like to hire someone to do that role, right? But that doesn't mean that it doesn't still make sense for people to do this, right? I think that it's one of those things where buying businesses too can be fantastic. I like real estate because it's a safe, tangible asset. With a business, the market could turn on a dime and your business could go bankrupt. But it's hard to screw up real estate. Even if you're the worst possible real estate owner, typically the market will save you, right, long term. If you have no cash flow and everything goes poorly and tenant destroys your property, probably appreciation will fix all of that if you're levered investing in real estate. Now, if you're owning real estate in cash or you have a lot of the equity paid down, that's terrible. Sell your real estate right now, because real estate is not a good asset class to hold in cash. It gives you a 3% return. That's terrible for the risk level. I believe you'd be better off, in a secured mortgage or, investing in something else. So anyway, forget the rest of my points, but I see some questions coming up. So I'll jump into the questions and then I'll jump back out to the other paths to millionaire. I think the couple of them were, there was the saving method, which is, the tried and true way. It's the guaranteed way. There's the investing in the stock market method. There's buying two rental properties, or two properties, one you live in, one rental property, and just waiting for 20 years, then you're a millionaire. There's the path where you, from 18 to 24, save half of all you earn, live like a student, and then go ahead and spend everything you earn. Keep that savings set aside and let it grow. And you'd be surprised that if you just save from 18 to 24, you'd be a millionaire by 60. If you just stop saving 24 onwards and just live like an idiot and spent everything you made. If you just started early and put a little bit away, that will grow to an enormous amount of wealth. The power being the eighth wonder of the world, compound interest. So that's the beautiful thing, is that the path to millionaire is super simple. If you just take action now and let time stay on your side and keep it invested somewhat smartly. At least be an average investor. You don't have to be better than average, just average. Good evening, Andrew. Acer, welcome. Justin, good to see you on. Andrew says, for FIRE, wealth building, and investments, Trump or Biden? Oh, geez, I don't know. I mean, there's a lot of ways you can unpack that, I think, Andrew. I don't really like either of the candidates, to be honest. But I'm not an American, so I don't follow a lot of the politics. Typically speaking, Republican performs slightly better for the stock market over the long term, and over the short term, slightly better as well than Democrat. But it depends on so many factors. The biggest thing that the real estate market, the stock market, the whole world needs is stability. So whoever provides the most stability is who you want in office. Who is going to stabilize the economy and be rational, right? From a public policy perspective, Republicans tend to be pro-hawk, pro-letting the markets kind of free float. Democrats tend to be more legislative, tend to be more, sort of controlling, like a government arm comes in and sort of regulates things. That can be good for certain sectors, not good for other sectors. As an example, like if you're a fracking guy or an oil guy, or you're about manufacturing, you might prefer a Trump, type Republican in office. If you were, you were a solar panel company or some sort of environmental type, you might prefer like a Democrat. Their policy would probably be better for you. If you're the bottom half from an income perspective, you probably prefer Democrat. If you're top half of income earners, you probably prefer Republican. From a monetary policy, economic policy perspective, that's who the parties tend to cater to. To be top half, you have to make it's not hard to be top half in the US. It's I think it's $30,000 or more and you're in top half. To be top 1%, it only takes slightly in the six figures. So you'd be surprised how many people will vote against what is good for them. Oh, we have a super chat. Hey, thank you, Anthony. Appreciate the $10 Canadian super chat. Can you provide some tips on constructing a legal basement suite cheaply? The going rate is about $100,000 to do the conversion, but I see you've been able to do it for about half that. Anthony, it depends. There have been times where I've been able to achieve that goal, and there have been times where I've run into things too, where there's been major foundation leaks, and it's ended up costing me a ton too, even with all of the experience that I have. Part of getting a really good deal, Anthony, and because Anthony super chatted, for all those people who are following, if you super chat, your question gets priority and it gets a nice long answer right when you super chat. So go ahead and super chat, appreciate that. But it keeps the channel alive. It is the revenue source for this YouTube channel. The ads give me less than I think it's half a penny per ad that gets watched, and not many ads get watched, so it doesn't make much, a couple of bucks. But so thank you. Back to the question. So constructing a legal basement suite cheaply. There are lots of ways you could save on cost and still achieve your goal of having a legal basement suite, right? As an example, if you're looking to buy a property to convert to a legal suite, look for one that already has a finished basement. In many cases, if the ceilings are already intact, the walls are already intact, a lot of the inspections that are required to make it legal are waived. So you don't have to do an inspection for framing if you're not changing any framing. You don't have to do any inspection for insulation if you're not changing the insulation. Again, on the ceiling, in most cases, you can add interconnected smoke alarms in the bedrooms and then connect them to the upper unit for the basement suite conversion and not have to change the drywall. Existing half-inch drywall passes where interconnected smoke alarms are added and certain provisions are met. And assuming like if there's piping or whatever, you have to use fire caulking around the pipes and things like that. There's some small nuances, but that could save you, in some cases, you'd get a legal duplex for like 5 or 10 grand, or a legal secondary dwelling unit for like 5 or 10 grand in some cases, because the finished basement's there. It's not an apartment. You throw in a kitchen where there wasn't one before, and everything else is already finished, so you just put interconnected smoke alarms in. Maybe you have to repair some of the drywall or get an electrician who's gonna hate you because they're fishing wire in finished walls. They're gonna hate it, but that could be part of it too, right? It's part of saving those costs is finding an electrician who's willing to do that, and so you can keep the ceiling intact. Now it depends. There's a lot of different nuances and things to that, but that's one of the biggest savings is finding a property where the ceilings are intact and you don't plan to change the floor plan any drastic or major way. That's my absolute favorite way to duplex, is finding something that's, you got 2 rooms and a living room in the basement. You're like, geez, this living room's huge. It could also have laundry and a kitchen in here. And then all I need to do is have a plumbing inspection to tie off this stack that's right here in the living room and put it in a kitchen. And so maybe you have to run an extra wire or something and maybe make some small cuts in the drywall, but stay away from the ceilings being fully intact. And then maybe it's not that much work. You can get a legal suite converted relatively cheaply. The other ways that you can do it just from like a cost saving perspective when it comes to construction would be, okay, let's think about this. So if you were to, instead of spending 100 grand to someone to do all the work, you could take on the role of project manager. You could say, I will hire the demolition guy. I will hire the framer. I will hire the drywall boarder. I will hire the mudder and taper to do all the taping repairs. I will hire the plumber. I will hire the electrician. I will hire the painter. I will hire the finisher who does trim and kitchen cabinets put in. And usually the finisher will also put like the backsplash in. You might have to get a tile guy to do that if you're going to do like in a shower. You might have to put a plastic surround in over top of the existing tub and it'll look beautiful. Like Bath Fitters does that all the time. It's like $1,000 and you put it over top of a nasty tub and it looks brand new. So lots of affordable ways to save money all along the way. But that's the best one, is to go get 3 quotes for each trade. Go get 3 boarders to come in and say, hey, how much to do all the drywall work in here? And if it's like $500 or $1,000, you might save a lot, whereas the general contractor might quote you, it might cost him 60 or 70 to get the work done, and he's baking in 30 or 40 for himself and for contingency and et cetera, so forth. So you can save a lot of money by being that person who pays all the individual trades, who orchestrates each individual trade's job. And if you find midnight workers, I call them, or people doing side hustle jobs. So you find the plumber who's a plumber 9 to 5, but he's open to do some cash jobs. And you just have one, it's your own basement, right? So you're like, come and do the plumbing. And he's a licensed plumber. You have him come on the weekend. He's like, if I can make $500, I'm happy to come on Saturday and get it done. There's electricians, be careful. You want to find a licensed electrician. But maybe you can work out a deal with a licensed master electrician who will pull a permit and do it properly. If electrical, don't mess around because people can die. But you might be able to find a deal. And I've been able to find these where master electricians will do deals for you, like $50 an hour cash or half cash, half on the books and stuff. So you can find deals that way that I've seen. People save good money that way. Another great way to save money: find someone to pull the wire at like $20 an hour. They'll or like at least poke all the holes. If you got an unfinished basement and you're redoing all the ceilings and everything, and it's a more extensive basement renovation, there's a lot of wire that has to go through every single joist or every single stud. Have someone go with a 1-inch hole bit on their drill and drill through all the holes for the electrician. So the electrician already has all the wires pulled. They're just making the connections to the panel and the connections to each and every box and making sure it's all to code. But if all the holes were already done for them, that would save them. In some cases, like you could have an electrician there all day just drilling holes and pulling wire. And so you could have an electrician instead check all that work over and have a $20 an hour guy do the exact same thing. Because any monkey can pull wire from here to there and drill holes through wood. That part's easy. The hard part's the connections and how high to put the boxes. Let the electrician do all of that. So tell the electrician, go and hammer the boxes in everywhere you want them, and I'll have a guy pull the wire from the panel all the way there and staple it all and do all the hard stuff. And you can get there are guys who have been electrician apprentices or something before, and they switch trades, and so they have an understanding of electrical, but so they know what they're doing. They're not an idiot that's gonna put a staple through a wire or something. But maybe you don't even want them to staple. Maybe you just have to literally pull the wire through the holes. And you show them how to do it carefully so they don't rip the jackets off the wire. But that kind of stuff can be huge for you saving money, right? That could be a $15,000 electrical job down to $1,000 to one guy to pull the wire and $2,000 for your electrician. You save thousands of dollars. That's a small hack. Other things you can do, I used to find flooring guys who would do $1 a square foot for install on the labor side. And I'd find deals on, Vinyl Click. It's my favorite. Put it everywhere. And it was like, geez, $1.50 maybe a square foot. You can find deals on vinyl plank. Go on Kijiji, see what people are selling. You can buy a shipment of vinyl plank pretty cheap. And it's best if you don't have any transitions at all. It's even cheaper. Just run the whole flooring throughout all the unit. No transitions. Transitions are like 10 or 15 bucks plus labor to install them. Just do the flooring continuous throughout if at all possible. And it looks better too. So there's some tips. That's a brain dump. I'm sure I've got a million more up in here, but that's all that came to mind at first thought. Wherever you can find ways to save money, maybe you send in a guy to clean up after the trades. You say, hey, you don't have to clean up after yourself. And they'll give you a discount because they don't have to come back. And the electrician, when he's done, has got a million little offcuts and wires everywhere. The drywall guy's got a million scraps everywhere. You can get a good deal on a guy that doesn't clean up after themselves, because cleaning up, none of the trades want to clean up after themselves. Maybe you come in after each trade is done and clean up, so the next trade is a nice clean site to work on. Clean sites, trades charge less, so keep your site clean. Lots of pro tips like that can save you a lot of money. All right, back up to the top. Wealth building and investments. I think that, I'll drop the Trump or Biden thing. I don't know. Either way, it doesn't really affect me greatly. I think economically speaking, Trump is more pro-economy now. I think Biden's more economy 20 years from now. So I don't know. As a business guy, Trump did fairly well in his career. He's had some downsides, but he's been smart about how he got things done, and he's the kind of guy that can get things done. He is crazy as well. Like some of the stuff that he posts, and I don't know. I don't give an endorsement to either. I don't know. Biden seems pretty old and pretty socialist, so they both seem pretty terrible. William says, happy Wednesday, Mike. Happy Wednesday, William. Victor says, hello. Hello. D. Howtu says, good evening, Mr. Rosehart. Jordan says, hello, Mike. Thanks for doing the show. No problem. Happy to help. Mr. Michael says, hey, Mr. London, how are you and your family? We're good. Thank you for asking. Consistent question every week. Love it. Oh. Hey, Aiden, how you doing? 599 super chat. Thank you. Appreciate that. Nicholas says, invest in SE and net stock. Both might double. I don't know. I haven't been looking into that, but I'll take a look. I am going to get into Irwin's stock hacking and options course. And I think that actually, now that I'm on that note, as an options trader, I would be pro-Trump, big time. And I plan to get into some pretty big options trading. I'm going to experiment for you guys and track my results and then share with you guys how that goes with stock hacking and the options trading. But I will say, and by the way, there's another $10 super chat I'm going to get to in just a second here, and it gets priority. I am going to say that Trump is pro-trader, pro-options trader, because every time Trump tweets something like, not going to work with the Dems on whatever, the market goes haywire and there's tons of volatility. And traders make their money in the spread. They live in the spread. And so whenever there's volatility, even if the market's going up or down or whatever, or like flat, the volatility is where you make the money as a trader, right? On the highs and the lows. So Trump's really good for options traders. They're doing really well right now because there's so much instability. So in some ways, as an options trader, I'll do better with Trump in power. So I guess personally, I'd be selfishly voting for like a Republican Trump. So I'm not American though, so I don't get a vote. Doesn't even matter. Okay, Jamal Horn says, can you discuss private businesses as an investor? Assuming you buy them, how does financing work? At what point in the real estate investing adventure would you recommend private business with active 60K salary? Great question. Because you super chatted, I appreciate the super chat. Thank you. Because of the super chat, you get priority in the questioning answering period. That's just the way it works. And then I'll go back to the top. And if I get through all the questions today in the time allotted, I will. Okay, so discussing private businesses as an investor. Yeah, so as an investor, Private businesses are fantastic because they're not publicly regulated or publicly traded. And so you're not competing against all of the other, people in the open market. So when a business is publicly traded, you've got sharks in the institutional side who are analyzing the hell out of it. That's their job. They're analysts, right? Who are trying to arbitrage the hell out of it, who are trying to find out, what the value is. They're trying to, pitch to other investors. There's a bunch of dumb money pouring in. And so you can have irrationality. You can have, there's perfect market theory that believes that like the market's completely rational and that this, markets are perfect. But in the private world, markets aren't perfect. Joe sells his business, his plumbing business, for $250,000, even when it's worth $500, because he couldn't find a buyer. This kind of stuff happens all the time. And so it's one of those things where in the private world, you can find insane deals. There is no, as far as I know, there's no insider trading in the private world. If you have information that someone else doesn't have, as a buyer interested in a private business, you have an edge. If you go drive by the business and talk to customers and whatever, and do all your due diligence, you can find an edge on a private business and exploit that and buy the business and presumably make a huge profit. With private businesses, you can be in full control. Public businesses, you're not in control, right? So that's why I love private businesses. They're fantastic opportunities. I'm talking about, your small, distribution company that's got 5-10 employees, your small, contracting company, your small pest control company, your small mechanical company, your small, service cleaning business or whatever. There's businesses everywhere that have like under 25, under 30 employees, just a small couple of $1 million business that you can grab for like some of these businesses you'll see pop up. I used to see them all the time. I'll look at one that I didn't end up buying in Toronto. It was a like a tool and die type manufacturing business, and they made like little widgets. I'm not going to talk about what they were, but like stupid little screw bolt widget things that they sold to large manufacturing companies. And they were doing, like, let's just say hypothetically that company was doing $4 million in sales. I don't know what they're doing. I'm just throwing out a random number. I do know, but I can't say. And let's say they're on that, they're doing at 20% margins. They're making like 600,000. Then they have, the owners drawing down like 400,000 for themselves, and they got some staff, whatever. Those kind of businesses pop up all the time. Business brokers put those businesses up for sale. Now, when the owner walks away, almost always the owner's retiring, they're moving to another country, or they want to get out of the business. So whatever reason they want to get out, you want to find out what that reason is. But if all things add up and they're actually just retiring, because by the way, a lot of baby boomers own businesses in southwestern Ontario, and they have to exit at some point. They've been in the business for 25 years. The problem is when they exit, what is the business worth? When they disappear, how many customers leave? How many employees leave? What happens to the business once they're gone? And what kind of plan can you put in place to basically ensure that it's a smooth update between, when they leave, a smooth transition from when they leave to when they basically, the new person comes and takes over. Hopefully it's you or someone you bring a partner in, or you hire someone as a general manager to run the business. That's the most ideal way, is you hire someone, put them in place, or you have a partner, you put them in place, you give them a piece of the equity, or you just pay them a salary, whatever. And you as the new owner carry on the business. You make some tweaks to the business to make it more efficient. Ideally, you find ways to cut costs or find ways to grow the business. Or you could just be buying it and looking for a cash on cash return. Business owners typically, when they're buying a business and when they're selling a business, are looking to sell at about a 3 multiple. So you get paid back in 3 years in full. That's typically what you're looking for from net operating income when you buy a business. And so and you can lever up to buy businesses. We bought our business. I've heard of stories where, I've seen this with a friend where they bought a business and they refinanced the business 6 months later, and they put a new secured line against the business's income, et cetera, and sales for more than they bought the business for. So they bought the business for, I think it was 25% down, then they refinanced it, and they were 0 down in the business. So you can own a business that's producing $500,000 a year in income and be fully refinanced out. And the second part of your question, and the reason why I love private businesses, and you can't really do this, the reason I love private businesses so much is because of that you can go buy, the industry standard is payback in 3 years. And in some cases, business owners, they know there's risk when they leave, et cetera. You get them to sign on for a 2-year contract or a 3-year contract where they stay on part-time, they guarantee the customers. You can be really creative in how you write up your offers when you're buying a business. So that's what I love about it the most, is you can be super creative and set up a win-win for them and for you, where they can go part-time, start retiring, pull themselves out of the business. In some ways, a lot of them want to stay in the business. They want to see it succeed. They're just tired of working in it 50 hours a week. They'd be okay to stay in it 5 or 10 hours a week as an advisor or as a part-time role to keep the business going. but they just want to be done with it. And a lot of the time, these business owners they've been making a couple $100,000 a year for 30 years. They've made smart investments. They're wealthy. Most of the business owners that I see selling businesses in value from, let's say $1 million business to a $5 million business, they typically have sales between 5 and 10 million in that range, and they've got lots of assets. They're rich. They're already multimillionaires, and they're old. They want to enjoy their life. And so for them, if they get $2 million for the business or $2.5 million, it might not matter. In fact, in some cases, you could offer them $1 million and a salary over the next 5 years and the right to stay in the business in some way, and they're totally happy and they're totally on board with a lesser purchase price. Or you can do a vendor take back. Say, hey, how about you got all this equity in the business, you got it fully paid off. And in most cases, business owners at that age don't have debt in their businesses that they own, and they want to see the employees stay on. A lot of them are their family, friends, etc., that they've worked with for all these years. They want to ensure that they still have employment. So you say, hey, I'll come and take over this business for you. I'll let you walk away, and I'll keep running, mom and pop widget maker, and I'll make it more efficient, whatever. I'll do this and that. I'll keep these things that you like. I'll keep these employees that you like. I even want you to stay on part-time to ensure the business succeeds. But how about I give you, you want $3 million for this business? How about I give you $2 million for this business, but I'll structured as $200,000 down right now, and you provide the financing for the rest. Once I've taken over for 6 months, I'll refinance. I'll take those financials to the bank, and I'll buy you out. You set up a vendor take back. You get 6% interest. You're the bank. Convince them basically that they're like holding a mortgage on their own business, which they love and trust, so they're probably going to do it. And it's one of those things where you can get involved in a private business and you can make astronomical amounts of return on investment and cash flow. And so that's why I love buying cash businesses that produce a lot of cash, stable, consistent businesses. I'm not one to buy businesses that are super high growth or super high risk, that have no revenue, like a Tesla that's never generated any profit. Hardly, anyway, I'm not gonna get into that, but that's what I like about private businesses. So that was a great question. Thank you for asking it. I almost should pay you $10 for asking that question because it really got me thinking and stimulating. Okay, so at what point in the real estate investing journey would you recommend private businesses with an active 60K salary? So do you mean, I guess I'm confused about that question as far as, do you mean when is the right time to start buying private businesses, or when is the right time to start working in a private business making 60K? I'm assuming the latter, and that, or the former, in that you're thinking you've got a couple properties. When am I able to actually buy a business, and what does the financing process look like? Well, you're going to want to go to a few business brokers. There'll be brokers at every single bank. There's also independent business brokers who specialize in lending against cash flow businesses. And they're looking for these opportunities, and they'll lend at 3%, 3.5%, 4% against these businesses, and like prime +1, in some cases prime minus, depending how much they like the business and the size of it. But they'll you'll put together a business case, you'll put together a business pitch, put together financials and pro formas and all that, and give it to the bank. And then there'll be questions and back and forth, and they'll make sure you're a fit operator. They'll make sure that the business is sound and solid. They might want an audit on the financials. And then you get done all that stuff in your due diligence period. You go to the bank and you say, look, what do you think the business is worth, and what are you willing to lend on it? And so they'll do an evaluation of the side based on cash flow, in most cases, based on multiple of net operating income. They'll lend a certain amount. And then you can go to that bank, secure that line like a mortgage, a lot like a mortgage, but not. It's a general security of assets is what they're doing here. They're securing against the business's future cash flows and income and all the assets in the business. And in a lot of cases, you might have to put 20% down, 25% down, but you can buy a business. And that's basically how you do it. So why invest? Why later in your journey? Because you've heard me say that before, that it's hard to buy businesses. Like everyone would just buy businesses if they could, right out of school, right out of business school, because it's the best return on your investment. And it's also high risk. But I would recommend get the experience first, because if you start a business at 22, you'll be naive, you'll make mistakes, and it might blow up in your face, and you might end up owing the bank a huge pile of money, and the business might fail. So I would say the more experience you have, the better. It's better to wait if you can. If you can work in accounting or consulting or in some field where you can build skills that are transferable to running a business, that would be ideal. It would also help the lender feel more confident in lending to you. When I went to my businesses, I said, look, I have a successful real estate portfolio. I have a high net worth. Here's the things that I've accomplished beyond just graduating from the rich Ivy School business. Here's my profile. And that was a big piece of the lender, the bank, in this case is one of the big 5 Canadian banks, feeling comfortable in lending us funds to buy this business, was our track record, my net worth. And I actually pledged my net worth against the loan, and that's what made them feel comfortable to give us, in this case, we put it was 15% down. You can end up refinancing a lot of that out, right? So that's where buying private businesses can be amazing. And I say, where in the journey, wherever you're able and comfortable to take that kind of risk on, and where the bank is willing to take the chance with you. So a $60,000 a year job, they might worry that your full-time job is going to conflict with you running the business. They might say, hey, we want you to quit the job and run the business. I don't know. It depends on the bank. It depends on the business. They might say, it's about net worth really at the end of the day. They might say, hey, you've got a couple of properties here. We don't see enough net worth that we feel comfortable that you should segment and segue into buying businesses. We think we should stay with the real estate for a little while, build some net worth up, and then go and do that. So it just depends really on, it really depends on where you are in your journey. And I think there's no set number, but if you're buying, say, a $2 million business, having a $2 million net worth would really make the bank feel comfortable. But, you could have a $500,000 net worth with a couple of rental properties, and maybe you can make the pitch to the bank and they would be likely to lend to you. It's really, at the end of the day, like a commercial real estate deal. With commercial real estate, the commercial property, it does the talking for you. It's more about the property than it is about you. So where you're buying your first or second rental property, a duplex, they're looking at your income. With a 10-plex, they're looking at the 10-plex's income more than they care about your income. They care, can the property provide it? That's how they look at a business. Can the business provide, and net of all these interest obligations and a sensitivity analysis of say 10 or 20% pullback when you take over, will there be enough cash flow to pay our debt? So if you're buying a $200,000 business that wants to, let's say the business, it has $200,000 in net operating income. That's the net after all the expenses, etc. If it's generating $200,000 a year, and let's say it had $2 million in sales, so the net is 10% profit margin. This is pretty common. See a lot of businesses that generate $2 million in revenue. Their net is $200,000 a year after all expenses, salaries, rents, overheads, etc., so forth. So a $200,000 net income. That net income in most cases has no debt attached to it because the previous owner owned it in cash. They built the business. They don't have any debt on the business. So you're going now to put a loan against this business when you buy it. And so you're going to have, let's say a $2 million, let's say you bought it for, that'd be way too much. Let's say you bought the $200,000 operating income business for $600,000. That'd be a pretty fair multiple, 3 times net operating income. And it's like what, I guess like 1/3 of sales. That might be a fair price. I've seen those types of, it depends on the industry. There's it's different for every industry. So I'm just throwing out a random number. But let's say it was a $600,000 business. And the bank made you put, let's say you're asking the bank, hey, can I put $200,000 of my own cash down payment to buy this business? And will you bring me the other $400,000 I need to close this business? And let's say there's no vendor take back for simplicity. There might be a vendor take back too. You might say, I'm putting up 100, the vendor's putting up 100 in a vendor take back, and I want 400,000 from the bank. And you go to the bank, and the bank says the $100,000 vendor take back is going to cost you $10,000 a year in interest. So they say the $200,000 net operating income, and they say when you take over, income might only be $150,000. Let's do a 25% reduction for sensitivity, for transition, et cetera, so forth. Let's discount the cash flow a little bit, discount the income a little bit. They might take a discount. It depends on the bank you're working with and type of business. But let's say they take it down from 200 to 150. Plus now you need 10,000 deduction to pay the vendor for the vendor take back. And the bank is going to lend you $400,000. $400,000 at 4% is $16,000. Let's say it's 5% for easy math, is $20,000 a year in interest. Is that right? 400,000 times 5%, $20,000 a year in interest. So they're going to take another $20,000 in interest right off the top too. They're going to say now really now operating income isn't 150, it's not 140, it's really like 120. Let's say it might even go a little lower. They might even say, hey, we need some principal pay down too. Is he going to be able to pay back the $400,000 in say 5 years? When you're borrowing against a business, interestingly, the amortization terms are not near as long. So when you buy a real estate transaction or any real estate property, you're going to get a 25-year amortization, 30-year amortization, very common to get a long amortization because buildings appreciate in value and it takes a long time to pay them back. When you buy businesses, no one knows where a business sector is going to be in 10 years. It could be totally obsolete. And so you'll have situations where you're buying a business. And by the way, for the 86 people that were just tuning to this live stream, if you want more of this kind of talk, I'm going to go here. I'm going to talk about buying private businesses. I'm going to talk about financing private businesses. If that's what people are interested in, I'm happy to do it. So it looks like people are actually reacting well and enjoying this kind of content. So I'm going to continue with it here. For the next 10 minutes or so, we'll keep going. I'll give you guys a 50-minute stream tonight. So I'll keep going with the financing. So the amortization tables when you buy a private business are between 5 and 10 years. That's typically what you're going to see. So they want to see let's say the best case scenario, 10-year amortization. That's a business that they love. That's a business they think is stable and long-term going places. And the business manager that you're working with that's helping you get the loan, they're like really confident in the business. They'll give you a 10-year amortization. That's on the long standard side. So 10 years of 400 grand means they want $40,000 a year back in principal pay down, plus they want $20,000 a year in interest. So they're going to say on your $150,000 income, they're expecting $10,000 goes to the vendor to pay his interest. Then they're going to expect another $10,000 probably in principal pay down back to the vendor. Then they're going to assume that you're at 130 now. Then they're going to assume the 60,000 they need to see there. So now you're down to like 70,000 in positive cash flow. So that's where in that deal, they'd probably be okay and they probably do the deal. But where there's businesses that have $100,000 in net operating income, let's say, on a 2 million sales, they're like, if you don't change the efficiency of this business in some way, there isn't enough juice there to pay down the mortgage pay down, to have the loan pay down for them, to give them the interest that they want, and the vendor have the interest in loan payable. So the big thing is servicing the debt. Can this business service the new debt you're trying to take on? So that's why I like to buy cash flowing businesses, because the bank doesn't want to lend on a business that doesn't have cash flow to service the mortgage pay down for them on their 5-year amortization. I'd say if it's a 5-year amortization, 400,000 into 5 years is like $80,000 a year in payback to the bank plus interest, right? So another 20,000 interest. You're $100,000 a year in cash flow gone to service those debts. And where you can find cash flow in businesses that make sense, it can be the best thing in the world. And so what are you looking for? You're looking for cash flowing businesses. You're looking for businesses you can take to the bank and the bank will want to see. And so there's your lessons for today on how it's different financing a business versus financing. And I look at a cash flowing business a lot like commercial real estate. They're not a lot different. 20-unit building is like its own business in a lot of ways. It's just you can't fire your customers. That's one of the terrible things about real estate in Ontario is you're forced by law to have a customer that you can't fire, that could be a dick to you, that could not even pay you, and you still have to service them. To keep giving them the product, even if they don't pay. Makes no sense. In a grocery store, they have to pay for the service. Like if you don't pay a phone bill, they cut your phone off. You don't pay for your food, they let you starve. You don't pay for your water, they shut it off to your house. But housing, oh, it's privatized. Privatized landlords. Forget landlords. They can foot the bill for rent. It's the only legal theft in Canada, in Ontario specifically. It's terrible. That's why I'm anti-landlording as a business. It's a hard business to run. It's one of the worst. One of the least forgiving, least rewarding businesses I can think of. That's why I outsource property management. It's a tough job. And the pay isn't good either. Most property managers make $25 an hour. So it's tough. Anyway, I got 76 people in here. Where are we gonna go next? Let's go for another question. Let's pick something out, pick something good. We're at 43 minutes into the stream. I'm gonna find something good for you guys. Scrolling through the questions here. There's a quick question there. Trevor says, nice fall sweater. Thank you, I appreciate that. I've had this sweater for a few years. It's a bit ratty. I got it for Christmas from one of my in-laws. Is it better invest in the distance to get cheaper properties and therefore less of a mortgage, or invest locally where prices are, say, $600,000 to $800,000? So that's the age-old tough question, I think, is where do you invest? Do you invest in a faraway market that looks very exotic and beautiful, or do you invest close to home where the cap rates aren't as good? And I personally am an invest at home kind of guy. That's just who I am. That said, we've got a property in Florida. I've got a couple of properties outside of London too. Primarily my real estate portfolio is in London where I live. It just so happens London has decent cash flow. And so I got the best of both worlds in that I chose to move to London and sort of got, investing in the right market. And I sort of made this my business. Who disliked? I don't know. There's always gonna be someone who's anti-business, anti-capitalism or whatever. The anarchists jump in and they like to see that rent is free and that the heads of anyone who's employing people are chopped off or something. I don't know. They want to see the economy spiral into the shitter. They want to see how socialism really plays out. They go look at Venezuela or Zimbabwe or freaking any other socialist country that doesn't have large natural resources to keep their economy afloat. Okay. What are some things I should watch out for when I'm buying my first off-market deal from a wholesaler? And by the way, I will circle back to the other question in a second here. I'm just thinking about my answer. Jordan, some things to worry about when buying off-market wholesalers. Most sellers that sell off market are selling off market because their house has something wrong with it. There's a structural issue that they know about, some reason they don't want to go on the market. And sometimes the wholesaler doesn't figure out what that issue is. Sometimes the seller doesn't disclose. And there's no regulation of the wholesaling industry. So there's a lot of garbage that sells wholesale, a lot of garbage that sells off market. And some of the off market stuff that you're seeing being peddled these days, especially in Southwestern Ontario, where McKeever and I have talked about wholesaling so much, and a lot of us, Ben included, have sold this idea that wholesaling is this amazing thing. There's so many wholesalers now that you're seeing the greed in the wholesale segment of the market. I haven't seen a lot of good deals off market. I've seen people selling stuff with $60,000 wholesale fees. They're selling stuff that's close to, like I'm seeing better deals on MLS. A bad realtor lists a property and poorly markets it, and it's a better deal sometimes than what the wholesaler is offering off market. And in some cases, the off market properties come with terrible tenants that you spend a year fighting with that cost you thousands, or they have a major issue that you have to deal with. So what are the major things to look out for when you're buying wholesale property? Because not all of them are bad. I've bought lots of properties off market. But one, do your due diligence and make sure you get a home inspection. Super important. A lot of the wholesale deals, they walk you through like, hey, we're pretending that we're buying this, so you got to go in really quick, 30 minutes, pretend you're a contractor. And so you're rushed through seeing the property. That's mistake number one. Spend your time, get a home inspection. Spend that time and really do due diligence on that property, especially if it's off market. If it's on market, you have recourse. You can sue the realtors. If they knew about foundation leaks or major issues, they're liable. The wholesaler isn't liable. They're like, hey, I'm just assigning this deal to you. There's no, RICO doesn't regulate me. There's no recourse. I have no insurance. You can't go after me. So you can get screwed in the off-market segment really easily. So just be careful. That's the thing to look out for in the off-market wholesale real estate category, is there's just a lot of hacks. And because the industry is unregulated and there's no accountability, then this kind of stuff happens. And to be honest, the process of wholesaling, you go in for like an hour and you lock a property up under contract. Like even if I was wholesaling, I don't know if the property has a foundation issue. I didn't do a home inspection. I don't know. So in some cases, the wholesalers themselves are just trying to sell this paper. They have no idea the quality of the house. And so that's where you just gotta be careful, guys, when you're buying off-market properties. And be careful, I've been talking to appraisers, a lot of people are selling off-market properties at insane prices. Privately, they're selling stuff for like above market. And people getting duped, like, hey, it's off market, it must be a good deal. Not necessarily true. In a lot of cases, it's not true. When there's two realtors involved, like the guy who's working for you, the buyer's agent, he's fighting to get the price down. The seller's agent's already, or the listing agent has already fought with the seller to bring them down their price, right? So there's been a lot of negotiations already happening. There's other people in the market competing and driving the price down if the product's bad. But in the wholesale space, they can create this coveted off-market property and get multiple offers in some cases with no due diligence and no background on the property. And so just be careful, guys. The same thing on MLS too. Just be careful. You can buy stuff with multiple offers and remove your conditions and be screwed. So that's where I just would say, be careful. There are great deals off market, but wholesalers are now getting a little more greedy. The market's extremely saturated, and so there aren't as good of deals as there once was. There were times where people come to me, in the beginning, before wholesaling was well known, I remember wholesalers were fighting for $5,000 wholesale fees, trying to justify that their piece of paper was worth $5,000. And I had a guy come to me with $100,000 below market property and was fighting, like, please can I have $5,000? Because people didn't know what to ask for. I had wholesalers come to me asking for $3,000 cash. They're like, hey, I spent 5 hours getting this deal under contract. It's my neighbor's uncle's property. I'd be happy to wholesale for $5,000. But now that wholesaler sees that, I'm not going to name any names, but other people in the market are doing $50,000 wholesale fees, and they're getting greedy. And now everyone's like, oh, geez, now I can get $30K for 5 hours of time. I can get $40K wholesale fee. It's an assignment fee to hand this contract over. And that's egregious. It's disgusting. There should be some regulation, and I think there should be with the increased competition, we should see fees dropping. But the market is so hot that it's easy for wholesalers to get rid of properties. So soon, I think that we're going to see, I think we are going to see a time where wholesalers are going to have properties that they can't get rid of, and they're going to start dropping their fees down and go back to the seller because they can't sell it, and they're going to be able to go, can someone mute this person? There is profanity. I'm going to mute this person right now. How do I remove them? There. Oh. One of my moderators get on this and mute this person. I can't figure out how to do it. All right, put them on timeout. Cool. Okay, back to the stream here. You know what? I'm actually really thankful, by the way, for people coming in and being haters, because there's nothing better, nothing more of a compliment than having, you know, a hater jump onto your stream. It means you've made something of yourself. It means people are watching, right? Like if no one's hating on your stuff, you're not out there. And so in some ways, I'm thankful for those people who jump in and provide the opportunity for all of us to see. Just found you on YouTube, loving it so far. Thanks, Isaac. Appreciate that. I don't do any new videos, so it's hard for people to discover me. I don't even keyword. I don't put any keywords in on any of my live streams, which I should. I really should. I wish I had one of my moderators on, but it is what it is. Okay, one more question here. I'm going to wrap up the stream pretty soon here. I'm a young entrepreneur, and I need help starting. Any advice? Well, if you give me a targeted question, I could provide some insight. Mrs. Mercy, it's tough, right? It depends on whether or not, like what segment you're in. Probably one of the best things you could ever do would be just live super frugally, like live on noodles and ramen, you know, at home, like Mr. Noodles. That's what you gotta do. You gotta live on that and just invest everything back into the business, invest your time and just build yourself up. At the end of the day, that's the key thing. If I have any of my moderators, I have like 3 moderators that I've promoted. I don't think any of them are on tonight, but if any of my moderators are watching, just keep an eye out. To your point, Mike, in 2020, the median household income in the United States was $68,000. And that's, Trevor, great point. I just saw that come up, a point we were talking about earlier about median income. Median household means the entire household. Like if you live with mom, husband, and wife, that's everyone's income combined, right? Gee, someone's sharing this in a group and we're just getting a bunch of people jumping on. This is troll. I actually appreciate it. YouTube will promote videos that get a lot of comments. So that's actually a huge advantage for us. Even if someone smashes the dislike button, like that's cool. It still lets YouTube know people are engaging in the content, and engaged in content gets promoted out to more of my subscriber base. So it's actually a net win when they comment. It just clogs up the chat at the end of the day. William says, hey, Mike, thank you for kindly taking the time to share. What have you been able to do for your family? It's been very inspiring. Oh, thank you. Appreciate that. And I have a lot more that I want to do for my family and extended family. So stay tuned. Keep on grinding. Take up those wire pulling side jobs Mike is talking about. There you go. Those are pro tips right there. I'm trying to pick out the best questions here. Selling covered calls is a nice way to make your gold stock cash flow. Now, that's a fair point. Gold does not cash flow, like Bitcoin doesn't cash flow. I'd probably rather do covered calls on something like, you know, cryptocurrency as opposed to holding it, because holding it doesn't provide any cash flow. Short-term maturity dates, out of the money, selling insurance to speculators. Anthony, great point. The thing about options trading that's great, or even even spread trading is fantastic. Like buying, you know, and live in the spread sort of thing is another way you can guarantee no losses with options trading. Do I speak Portuguese? No, I do not. Sorry. I have been to Brazil though. Fantastic, fantastic country. I spent some time in Belo Horizonte and in Rio. It was great. We went there for our honeymoon in 2014, actually. All right. I think I'm going to pick one more question. I want to create some sort of sustainable e-commerce business. E-commerce is tough, but can be very, very lucrative. I'll do one more. On the topic of wholesaling, I like this one that Gerald put in. And by the way, if I missed your question and I didn't get to it, because there's a lot of questions I couldn't get to today because I had to prioritize the super chats. Talking about the question, if I missed your question, I've seen questions pop up here. If I missed them, save them, and then when the video is done, post them in the comments section for everyone to see, and I will respond in similar fashion that I do here, but in a typed response for everyone to see and for the benefit of everyone. So that would be awesome if you could save your question now in a notepad or something and then repaste it after the stream. So you're talking about how do you find properties off market. I lost my spot. Here it is. Gerald Manchuri says, any advice on finding rental properties before they hit the market? I found properties typically through Zillow and Redfin. That's more in the US. However, by the time I see it, there are multiple offers over listing. Again, the market's crazy, and a lot of us YouTubers have sort of shared all of the good nuggets on how to find properties. And so you can go follow a wholesaler and they'll tell you all the strategies they're using to buy off market properties so you can copy them and emulate them. But strategies that used to work more effectively, they still sort of do, is the tried and true door knocking, flyer dropping, bulletin board posting, online, Kijiji, Facebook are still fantastic places. People who hate realtors or are cheap, trying to save money on a realtor, will post on Facebook Marketplace. Very common place to see houses listed. Kijiji, if you're in Ontario, probably Craigslist. If you're in the US, you'd see a lot of people posting there. That's a great place to find leads. I've seen houses pop up and then the buyer took the house down, and I troll it. I used to troll it every day when I was really hungry to find deals. I'd be trolling it twice a day. And I'd see an ad pop up and they'd take it down. They get a couple people reach out to them, they take off the listing, change their mind, don't want to sell. That's okay, gets your foot in the door. So in a lot of cases, you can find deals that way. It's a great way to find deals. But another way is just offer to pay people. Say, hey, I'll pay you $2,000 or $5,000 cash. If you can give me a referral to someone who wants to sell a house, if you end up leading to that sale, I'll give you $5,000 cash. Most of the wholesalers give $500 or $1,000. So if you're not a wholesaler and you're a private individual looking for a good deal, say, hey, I give you up to $5,000 if you give me the right deal. If Aunt Joe sells me your house, I'll give you $5,000 cash for the referral. You go to the neighbors, say, hey, if you hear of anyone who's looking to sell their house, let me know before it hits the market and I can give you up to $5,000 cash as a referral fee. And you'd be surprised how many people are motivated by money and will give you a lot of leads that way. So that's a fantastic way to get leads. I used to, at a time, I was telling everyone that. If you know of a deal, let me know. We actually bought a property because of a lead that a painter had. A painter of mine was like, hey, I heard you give cash for deals. My uncle's estate or whatever is selling this property in London. Do you want to pick it up? And it's a 6-bedroom property. Long story short, I actually JV'd on it and the JV partner cut me out and they still had the property and I got paid out like $8,000. It's kind of a joke. It was an insult really at the end of the day, but that was a really good deal. It was like 100,000 under market and they got paid out. So that's an example right there of how letting your trades know. I let all my painters, and you'd be surprised how many people your painter knows and your property manager knows and your flooring guy knows. And so just letting them know, hey, you could make, the money of painting 3 houses by just letting me know if someone who you hear is going to be selling their house. And like, hey, you're painting, and he's like, hey, I'm actually painting a house. Another painter told me, hey, I'm painting a house and it's going on the market, I hear, in the next couple of months. It's a flip. You want to take a look? So people send me leads that way all the time. It's a fantastic way to get leads. It's to start talking to the local trades because they're the people getting the houses ready for sale. The painters and the flooring guys and the property managers. They know what the investors who are pissed off, who want out, who are tired of managing the tenants. That's the people you call if you want to get leads. I think the flyer route is milked. Like McKeever and the whole team in London have hit, and the other wholesalers like DCI and all the other guys in town, they've already hit every house 10 times with flyers. There's no point in sending a flyer. Like some of my houses have got like literally 10 wholesale flyers and they're all the same. So that strategy doesn't work when everyone's done it. So try things that people aren't doing. And I got lots more up my sleeve, but I can't give all my tricks away in one stream or you're not going to come back next week. So I'll see you guys all next week, live 7 p.m. Eastern, and I'll see you all in the comments and on Instagram at Mike Rosehart. I post 6 times daily and I'm always accessible and available. Thank you all so much for watching. You know the secret to unlocking a wealthier you. There's 3 levers in your control of your financial future. Spend less, earn more, and maximize returns on the difference. It's what you spend, it's what you earn, and it's the returns on the difference. Bye everyone. Have a good one. Thanks for watching.